very much. This was anticipated, but now that the circular is out, what do you make of it, and what is it going to mean as far as rebalancing of portfolios is concerned?
So I think, I would welcome it from two perspectives. One clearly is, because the industry has been getting approvals from the regulator over the last 25 years. And with market evolution, what you just narrated, the definition of what is large cap, what is mid cap, and what is small cap. So if you got an approval on an offer document, say 20 years back, what your interpretation was, what your offer document said, and how you've been managing the fund over a period of time, versus what you got approval, say 2 years back, and what definitions were there and what approvals you got. So I think there was a lot of if and but and a lot of interpretation around what a fund constitution is. And this has a massive impact on investors, because what an investor is buying and what he's getting into and how a fund will be managed. So one is no level playing field, and second is difficulty in comparing the right things. So from industry competition perspective, this is now level playing field. And from investors' perspective, they can be sure that they're comparing apples and apples.
Okay. Let me also bring in our colleague Surbhi Upadhyay. She's been tracking this story. Surbhi, over to you.
Thanks, Shireen, for that. So I suppose it's not coming as a surprise, as Ashish also pointed out, because we had almost 30 different type of mutual funds across the debt and equity and the hybrid categories. And now these will be streamlined into 5 or 6 top categories. But Ashish, my question to you is this. Now, with the definition of market capitalization being very clearly defined by SEBI, will there be a lot of churn, will there be a lot of churn in existing schemes to subscribe to these new regulations, these new market capitalization thresholds? Because as we know, whether it's multi-cap funds or sometimes even, for instance, mid-cap funds have a fair degree of a large-cap exposure. So will a lot of changes be required to adhere to the new norms?
Yeah. So, specifically about the two examples that you narrated, a couple of things. One is that multi-cap is a given category in this particular new circular. And there's another category which says large plus mid. So if you have multi-cap as a category, large cap as a category, and then you have large plus mid, and then you have mid, I don't expect too much of churn really from that perspective. Plus the fact that large cap is not 100% large cap. It does have some 10-20% plus minus allowance for slippages where sometimes stocks depreciate from the universe or some stocks come in from lower runs. So I don't expect an immediate churn, but yes, definitely anybody who has too many funds in the same category, and then they already have existing funds across categories, so then you will have to merge those schemes. You might have to change your universe of investing so that it fits into one or the other category. So yes, eventually I think the churn will be more from investors' perspective. I think investors will see a series of change of fundamental attributes and a series of addendums and circulars coming about. So I think that is going to be the bigger impact. I don't think that portfolios will immediately get churned too much unless and until you can find the right category where the portfolio has to be slotted in.
So also, Ashish, if you had a chance to go through the fine print, there was an expectation that fund houses will be allowed to only have one fund per category. You can't have multiple funds in each category. Has that also come through? And then will that mean a lot of collapsing of schemes? So, what kind of changes does that entail?
Yeah, so on your first question, I did go through this. It specifies that you're allowed to have only one fund per category. That has specifically been mentioned. I saw that for sure. And as far as your second question goes, definitely if somebody has more than one fund in a category, then either they have to merge these funds or they have to, close one fund. So there will be a lot of action. That's what I was alluding to in your previous question, that investors will see a flurry of communication coming to them, and I hope that they don't get confused with it.
Okay, so you're saying that the one fund per category is indeed part of the circular, and you hope that investors will not get confused by what comes their way. But Ashish, from a practical point of view, is this going to lead to some sort of skittishness, nervousness when markets open for trade on Monday?
No, I don't expect that, because, this is a long-drawn process, because what the circular says is that, okay, you need to follow these rules, but they've given us 2 months to go back to the regulator with the plan of action, that, where you need to submit back, that, where does each of your products fall in, what products necessitate changes. So there is a process behind it. We need to review our entire product range. We need to get trustee approvals, our board approvals, and then we need to go back to the regulator. So I expect that there'll be some back and forth on this, and people will be making changes over a period of time. So definitely, I don't expect anything immediate to impact really as far as markets are concerned.
Okay, I would request you to just hold on, Ashish. We've also got Sunil Subramaniam of Sundaram Mutual Fund joining us now. Sunil, as Ashish Somaya of Motilal Oswal was pointing out, this has been anticipated. We were waiting for the official circular. What does this now mean as far as rebalancing or rejigging of portfolios are concerned? What is it now going to mean as far as mutual funds go?
First of all, I think the circular has come out in a much more pleasant and broader manner than the discussions which were in the run-up to the circular. So I think that SEBI has been very flexible in terms of allowing a lot of nuanced differentiations to be permitted both within the equity category and the debt category. And thanks to this, what will happen is that we do not expect a significant degree of fund closures or fund mergers to take place. Where the great degree of change would be in the offer documents in terms of the investment management style of each fund, where you will have to now be very clear and specific as to which category your scheme falls in, and you will have to, going forward, follow that. And SEBI has given a bit of time for you to rebalance the portfolios to the new one. So I think while this may lead to a little bit of change and churn in the portfolios, whereas, for example, just to give you a small example, large cap fund now has minimum to be 80% large caps. Whereas there is a large and mid-cap category which allows 65% minimum which can be kept in large caps. So if a fund house has two large cap oriented funds, and today the fund houses have been managing them in differing styles over their lifetime based on market outlook, perceptions, and clearly positioning them to the distributors and investors at the time of marketing these funds. What this circular will do is it will firmly fit each fund into a particular category, and going forward for the rest of its lifetime, it will remain in that category. So I think it's very good from an investor and a distributor perspective, because the clarity, when they go and in turn sell the fund to an investor, there is an extremely high degree of clarity on what the fund manager is going to do in managing the fund in the future. And the second thing is it will allow distributors and advisors to compare fund houses, different funds of different fund houses which fall in the same category. No fund manager can create a differentiation other than by his choice of stocks. He cannot alter the asset allocation pattern to deliver alpha. For example, suppose at a period of time, mid-caps are doing very well. Fund managers would be tempted in the past to have slightly increased the mid-cap portion given their view of the market to deliver better value in what is broadly a large-cap fund. But going forward, once you're fitted into a large-cap category, you can take maximum of 20% mid-caps. So which means that every fund manager who's playing in the large-cap category has only 20% flexibility to add mid-caps, and hence it's your stock selection and the quality of your research which will drive that superior performance. And hence advisors, when they compare 2-3 funds in presenting to an investor, will be actually, be very, very comfortable in knowing that what is the reason for a particular fund manager generating a superior return. I think this is an excellence for the long-term growth.
Mr. Subramaniam, sir, if you could just allow me to come in there. Absolutely, as you're saying, that the long term, no doubting perhaps that it's in, of course, investor interest. But what I'm trying to understand is what it means for the interim, the short term. As some of these rejigs happen, and also on the debt mutual fund side, because there I think we had almost 16 different type of debt funds. Will you have to stop taking inflows for a bit before these changes are made? Will there be a certain period of closure? I mean, how will the transition take place? Mr. Subramaniam, to you, and then as the same question to Ashish.
I think SEBI has given a period of 2 months for you to decide which funds go into which categories. Okay, that's one. Second is there is a time given to rebalance the portfolios. So I think nothing changes as far as inflows are concerned. Because in these 2 months, once you put it up to SEBI and then you go to the public, you can continue taking inflows in the funds. I don't think there is any bar. So there will be no stoppage of inflows into any funds, right? The only case where there could be stoppage is if a fund house clearly decides that he has a fund which does not fit into any category or he does not want to put it. And hence, if he's going to either merge it or he's going to close it, then it is his choice to communicate that to the investors and advisors and say this fund is not going to exist in a point forward. Hence, I'm not taking flows. But I do not expect too much of that to happen.